As we were talking to the management of Dhanuka, markets I think have given up a slight bit of their gains, or rather slight bit of the gains that they had seen from the start of 230 factor. Just pull up Nifty, I think it's down about 92 odd points now. We are not exactly at day's low, still about 15 points away from that level, but I think PSU banks again have cracked. Like just pull up PNB, Bank of Baroda, Bank of India, maybe even SBI. I think that part of the market is clearly putting pressure on the market. We'll just pull up those names. So a PNB which declared numbers, a dreadful number, 7% decline. Now it's at the day's low. Let's look at Bank of India, probably some others. Okay, I think we're getting Hindalco numbers coming in. Profit has come in at 40 crores. I think this is the standalone number. It was estimated to be on the loss side. So it was estimated to be a loss of 130, 140 odd crores in terms of Hindalco numbers, but they have declared a profit. These are standalone numbers. The release is not yet open. So 40 odd crores as far as numbers are concerned. We'll just show it. It was expected to be a loss and very unlikely that, a company like Hindalco would beat by such a margin. 8020 sales, there is a miss of 300 crores. So I think that with that miss coming in, it's very, very unlikely that, we would have such a big positive beat coming in. There could be another income number to it, but it's probably too early to take a call on that. 0.3% higher, but I think that's just looking in at the PAT number. Probably the street has started to get excited about these names, but clearly this number is unlikely to be a clean number or a clean quarter that we are talking about. Hindalco is now up 0.1%. PAT has come in close to about these numbers. Net profit has come in at about 40 odd crores. Expectation was 160 or 160 odd crores. So not looking that good. Hindalco up about 1%. Mayuresh, any reaction on the Hindalco numbers? One should not just look at the PAT and look at the internals.
Oh, absolutely, Pankaj. And clearly, I think looking at the macro environment and company-specific issues that Hindalco has been facing in terms of realizations going down, it is evident from the top line probably going down on a YOY basis. So again, I think there would be one-offs as far as the bottom line is concerned, in my opinion. And again, I think one has to see the numbers optically in terms of how the operation performance has been, both on its melting unit as well as its Utkal aluminium facility.
Right. As we are speaking, I think GAIL is also declaring numbers. I don't have the details coming in of GAIL, but probably net profit has come in at 62, 63 crores. We'll just get the details. Mayuresh, any sort of a view as far as PNB numbers are concerned, and in turn what the PSU banking space should do?
So clearly, I think there has to be a lot of cleaning up to be done on PSU balance sheets from the management interaction on what PNB said. I think a lot more cleaning up will happen. Disastrous set of numbers, I think. Analysts had penciled in higher provisioning and higher GNPAs, but it turned out to be much worse. In fact, even the net slippages, if you even exclude the slippage from the restructured book for PNB, slippage is much higher than what analysts had expected. So clearly, I think disappointing set of numbers. That disappointment might continue in the quarter to come as well. Clearly, with Dena Bank's numbers coming through as well, you're going to see a lot of pain probably coming through on the PSU balance sheets, and that pain might persist for a quarter, to say the least. If there is no cyclical recovery in terms of the end user industries, that pain might persist going forward as well. So again, I think valuations are attractive, but clearly I think the deterioration in book and asset quality, I think is getting clearly played out in the way the stock prices are probably moving.
Right, but still, with these numbers coming in, the problems could just increase because finding capital would be difficult. Maybe when such sort of a slowdown happens, the economy slows down, and that's why growing would be some time away.
No, clearly, I think that is a phenomenon that the entire industry faces, Pankaj. So I think how the credit growth pans out will be dependent on how the end user industries are performing. Clearly, I think what you're probably looking at in terms of asset quality pressures for a lot of these PSU banks, as I mentioned earlier, I think they would probably persist. And again, I think they really don't have a choice. So at least on the accounts that RBI has mentioned, I think the cleaning up has to happen on that front. Couple that up with the industry slowdown continuing or prolonging for some length of time, you might have other issues cropping up on other accounts. I think one is not really sure, and that is the basic fear factor that the street has on the deterioration of the asset quality going forward as well in what has got provided so far. So any further provisioning down the line, if the recovery is later rather than sooner, I think will have a toll in terms of how the book will pan out for a lot of these banks.
Right. What do you make of the sell-off that we are seeing in the markets today? You think more than global, it is led by earnings and the earnings disappointment?
I think it's a mix of both, right? I think the earnings have surprised in some pockets, while the earnings in some pockets have been disappointing. But largely, I think the earnings have been subdued or sluggish, and that sluggishness might continue well into the fourth quarter. So I think the markets are probably discounting and just stating a lot of that on the domestic front. However, I think it's more global in nature at this point of time, and we are mirroring on what the global markets are doing, because there is a lot of uncertainty in terms of not just China and crude, but again, I think what US data points have come up in terms of that slowdown actually reaching US shores as well. So clearly, I think you're not really sure on how global demand, how global growth is going to pan out. And again, I think India is standing out within the emerging pack, more of our resilience domestic consumption story rather than the commodity driven story by a lot of the emerging pack. But clearly, I think in terms of a commodity slowdown and a slowdown in terms of demand, India will get affected in the larger scheme of things. So I think, in my opinion, I think it's more global in nature, and we'll be mirroring what the global market do from a short and interim perspective.
Right. Something like a Tata Motors, would you like to play that at 311, considering how the price is, what is it factoring in, or just stay away from such global stocks that are linked with global growth?
No, clearly, I think once you've got these question marks on how global growth and how global demand will pan out, I think you again get these fear factors coming on a lot of stocks which are a basic global play. So I think JLR had gestated quite a bit in terms of how the China volumes were expected to pan out. And again, I think if one really assumes the China slowdown to continue, I think the other markets have basically held up pretty well for JLR. So you talk about the North American markets, you talk about the European markets, you talk about the UK markets. They have held up pretty well. The platform and the new launches have been well accepted. So clearly, I think it's how you look at numbers, and probably numbers so far have been not disappointing. However, the fear is that if this persists for a longer periodicity of time, you might probably have volume degrowth start coming through. But again, I think the numbers so far are not indicating any of that. Clearly, I think I'll wait for numbers now, Pankaj. I think we're very close to what Tata Motors is going to post. So let's see how the JLR performance has been. We're still expecting probably JLR margins to remain between that 12-13% kind of a mark, considering the Chinese slowdown, and the Indian markets have held up pretty well as far as the MHCV business is concerned. So clearly wait for numbers, I think, and wait for clarity on how the management commentary is basically in terms of global demand supply. But I think the valuations have become attractive. But I think we'll wait for numbers, the management commentary thereof, and then we'll take a call onto the stock in terms of fresh investments.
Right. How would you essentially look at the GAIL numbers? I'll just read them out for you. PAT has come in way higher than estimates, 664 crores. Estimates was 500. Sales have come in below. For a company like gas company, profits matter more than sales, or it's not so much a function of sales because it's only determined by the global prices of gas. You think good numbers among the environment that we are in, these stocks could do well because profitability is increasing?
No, clearly, I think one really needs to understand two different perspectives here. I think if you're talking about historically in terms of how the gross block has performed for GAIL, I think the gross block addition has lagged behind profitability, more or less to do with the underutilization of its pipelines. Whether that has improved thereof, I don't think so, probably. I think you're still looking at the southern pipeline still being unutilized, specifically the Kochi pipeline, and that probably will have a bearing in terms of their underutilization going forward as well. In terms of profitability, I think one really needs to check a line by line item on what has probably impacted that. The renegotiations that we're probably doing with RasGas, the waiver of penalty, might act positively in terms of GAIL, Petronet, IOC. But clearly, in the larger scheme of things, you're probably looking at utilization levels has to be consistent. I think in terms of how the turnover ratios are panning out, and though the gross block is adding, as I mentioned earlier, the profitability should move in the same tandem, which unfortunately not has happened. So I think you need to analyze the numbers in more detail for this quarter, but one really needs to do a line-by-line analysis in terms of how the profitability has panned out.
Right, but say if the numbers are good, or they are what they are appearing to be by the face of it, you think it's still a under-owned name despite the 50 rupee up move that we've seen in 2 months?
Maybe, but clearly I think a lot of action has probably happened in terms of anticipation on what might go right for the stock going forward. I do hope so. I think that the pipeline that we were talking about does see some amount of traction, and if that does happen over the next few quarters, you're going to see a quantum jump because the base has been so low in terms of how earnings have panned out. So I think on the face of it, the numbers look pretty reasonable. But again, I think need to look at a greater perspective in terms of the outlook, and again, clearly in terms of the key parameters that I mentioned earlier.
Right. Mayuresh, as we are speaking, Dena Bank is down about 11%. It's closer to the 30 rupee mark. No point of trying and doing some value hunting into these names like Dena Bank, Allahabad Bank, or maybe some other names from the mid-cap PSU space. It's down 12%. Of course, on the basis of the numbers that they had declared. No point of bottom fishing into these smaller mid PSU banking names?
Again, clearly, I think I've always desisted from getting into the mid and small cap PSU stocks because you're not really sure in terms of how the lending book has panned out, and probably what you're seeing right now, the cleaning up exercises that are happening. I think the asset quality deterioration is a well-known fact that might pan out, as I mentioned earlier, over the next few quarters, to say the least. So clearly, I think though the book value on a price to book basis appears quite reasonable and quite cheap, it is again about analyzing how numbers will pan out, which look very uncertain at this point of time. So again, clearly, I think, as I've been mentioning time and again, I think only a part of your portfolio should be going into markets like these. The best way to approach the markets, if you're a retail investor, is to do SIPs through mutual funds. If you are not an avid investor, probably you should be looking at investing only a part of your money, and that in qualitative stocks, large cap stocks, where our belief is that the valuations have contracted. Whether the markets might correct further from the current levels, it is a possibility because nobody is sure in terms of how the global volatility will pan out, coupled with how the domestic scenario will pan out. And add to that, you've got a major event like the budget coming up in the next couple of weeks. So clearly, I think conservation of capital is very paramount at this point of time. You should be extremely cautious at this point and extremely stock specific, and go for large quality, good corporate governance companies which are well governed and with earnings visibility over the next 2 years at least look very, very reasonable.
Say if any of these banks, even the large cap ones like PNB, were to come and hit the market with the private players for a QIP issue, you think the discount would have to be very large, which in turn would mean that it would be very big negative?
Again, I think looking at how the numbers are panning out, Pankaj, I think it is going to be a well-known fact that asset quality pressures will remain on their balance sheet. The management has indicated that it's going to remain extremely soft. So I think it all depends on how the capital raising is going to happen. And again, at this price, considering the kind of book that we're probably looking at in terms of how earnings are expected to pan out, one really needs to understand how they go about it. But clearly, I think the only supportive factor for a lot of these larger PSU banks is that the valuations have become extremely reasonable and cheap. But again, I think that is not a compelling reason that investors will go out and buy. I think investors will need further clarity and again consistency in terms of how the asset quality performance is going to be, because the entire performance on the PSU lot is going to hinge on how the asset quality pans out, which is expected to be extremely soft, at least for the next quarter or two.
Right. We had steel companies declaring numbers as well, but we have the MIP also coming in. You think it's just a relief and again no reason to buy as the business case is not very strong?
So clearly, I think the government move is very encouraging for steel players, because I think they needed to do that in terms of how dumping was coming through. But clearly, I think again two factors what basically hinge on the recovery of how their cash flows will pan out. I think the kind of inventory that we're probably sitting on, a majority of the steel industry, I think is still pretty high. So I think you need to basically get that inventory off your books for the better part of the next couple of quarters. Add to that, I think the demand recovery has not been so strong. I think, are we seeing signs of that happening? Possibly not. And that is very clear from the fact that realizations have been extremely slow and muted. So I think the fall in input costs have been there, but the fall in realizations have been much larger. So whether you see realizations improving, I probably don't think so, at least from a short to medium term perspective, because really I think a catch up in demand has to happen, which you're probably not seeing signs of at this point of time. So I think it's a good move for a lot of these steel companies because they needed that. Would it translate probably into balance sheet improvement, at least in the next couple of quarters? A little bit of a doubt, because again, I think it entirely depends on how the demand outlook grows, which I think is going to be extremely slow and gradual.
Right, but again, for the near term, one should just stay away.
Oh yes, again I think one really needs to see how the numbers pan out for Q4. I think you're going to see probably some amount of respite come through partially in Q4. But clearly I think a lot of these steel companies will not be able to take huge hikes or improvement in the realizations for their end products, basically because I think the demand is not there. So I think the entire key factor here is how demand shapes up, and that demand recovery is going to be slow and gradual, which means I think the numbers will also come out with a lag effect. So clearly I think numbers will be a little bit soft even in the quarter to come. So clearly wait for numbers to come through in Q4, wait for management commentary, let's see how the MIP effect is taking place and whether there is a genuine demand recovery, which we're probably seeing from the end user industries.
Right. Mayuresh, thank you so much for taking out time for us. Always a pleasure talking to you. As we were talking to Mayuresh, markets continue to be subdued, down about 90 odd points, so no major movement in the last 15 odd minutes. Taking a break, coming back into Focus on Markets would continue.